So I'm thinking we're going to do a lot of seed, and I've been doing probably half of what I've been doing over the past year and a half as an angel has been seed. We have such great companies and folks on the pod and in the ecosystem. I've also been doing some A's, B's, C's, just like small checks, personally participating. I'm thinking of some great opportunities for that for the fund too. What do you do when you see stuff like that?
We are doing increasingly Series A's and Series B's when we can get into them. And so we'll do a new investment in a $50 to $200 million round. It has happened. That's not our bread and butter though. I think what I learned over my 10-year journey, which you're basically starting exactly where I started, which is you got a podcast, you got the audience, you got the brand. What I quickly realized was the amount of work it takes to put in 25 or 50K is the same amount of work as putting in 3 million.
Yeah, totally.
And the amount of work you're going to put into it over time is going to be the same. So the quicker you can get to a larger dollar amount put in and to 10 to 20% ownership in the winners, the better you're going to do. And when I went out with my second fund and my third fund to meet with the top LPs in the world, literally the top endowments, I got meetings with every single one in their office with the top person because I got a good brand and I was able to, get those intros, et cetera. The thing they obsessed over was my ownership percentage of me being a solo GP. And I told them I'm going to be a solo GP. So if you don't like that, what if you get hit by a car? I'm like, the fund wraps up. That's it. And a lot of people passed. Most people passed, obviously. And they couldn't get their head around the solo GP thing. And I was like, that's fine. I don't need you.
What year was this?
This would be 2016.
Okay.
Yeah, so really before that
2019 window. Yeah. I was just a weird beast they couldn't understand. And then,
pioneer, I think, is the right
okay, language. Sure. Yeah, not for me to say, but if you were, yeah, of course. Like for me, it's not for me to say, but sure, yeah.
We'll say.
No, that reminds me of the scene in Get Him to the Greek, where they're like calling Russell Brand's character. He was going for with this African Child music video and this theme album, like a Jesus, like an electric Jesus. I mean, it's not for me to say I'm Jesus, but it's sort of, he basically compares himself to Jesus.
Oh, he's so funny.
Absolutely
so
no self-awareness as a rock star. It was pretty great. But that was my big learning. And then they were like, what's your all they wanted to know about was pro rata, follow on, et cetera. And I said, listen,
these are the large institutional LPs.
And the reason they're asking that, Ben, is what? Why are they asking that question, Ben?
At the end of the day, this is not just a hits-driven business. This is like a Grand Slam-driven business. And so to the extent that you are in one of the few companies that will matter this decade on an enduring global scale, it's about owning as much of those companies as you possibly can.
100% correct. They don't believe in spray and pray. They believe in hitting an outlier, the Grand Slam of Grand Slams, and 10xing on that. So that's how they make money, is when they get into an Uber, WhatsApp, whatever, where they're in a fund that gets into one of those with a meaningful percentage. That actually moves the needle.
And they're dealing with so much capital. You're the Harvard endowment. You got $50 billion under management. Like, you need a lot to move the needle.
I think a lot of them are moving to a minimum of a $50 million check size for funds. That's like they're tiny. And I was doing I did a $44 million fund for a third fund. And then I realized I don't really need them anymore, because I can email my syndicate with 8,300 members and have whatever, $20, $30, $40 million fund popped up without doing any meetings. And then every time we do a syndicate deal, it does 5 times whatever the fund's investment was. So we did 12 syndicate deals in June. We're on track to do 150 investments this year and put over 100 million to work. So even though I have a $44 million fund, I'm actually putting 100 million to work, which is like being a GP with a $300 million fund.
Are you leading in most things that you're doing?
Most things now.
Most things,
leading, co-leading is probably the big thing.
See, that's the big question I have. We're going to have to see how things evolve. I was an institutional VC for over a decade. All I did was lead. And it's been so nice not leading and following. And so the strategy here is follow. And we'll see how that goes.
What you really want to do is hit one and then offer it to your get a bigger allocation in all cases. So you find one you love, you're putting 50K in. Ask them if they would be okay with you syndicating to your top LPs and friends another 250 and see what they say.
Yeah.
I did that for Calm and exactly those numbers. It was the first deal on AngelList from a syndicate was Calm, and that was my first syndicate. And I put 50K in. The syndicate came in for $328,000. That $378,000 bought 6% of Calm. which is a
Wow.
$2 billion plus return. It's a $120 billion position. It's the
And
biggest
you kept your pro
return.
rata.
We did a little pro rata, but we actually were able to sell some in secondary twice along that journey to book some wins. So we still have 80% of our shares. And it's the biggest return in the history of AngelList. Although because AngelList and I don't have a good relationship anymore, they never talk about that, I think. But I have the number one syndicate in the world, no longer on AngelList, and I have the number one return in the history of AngelList. No return comes anywhere close to Calm.
We're not saying you're Jesus, but
I'm not saying Jesus, not for me to say, but you should get on the SPV train immediately and say, if I could come up with 20 more people who put in 20K, would you be up for that? And just start that now, because you're eventually going to get there, and everybody's going to want you to put more money in. And Dave and Rosenthal is a brand. They're going to want you to have more on the cap table. Just give the founders what they want. Give your LPs what they want. And what happens if you have a Calm and you put 50K in from your fund? Great. It goes 400x. It becomes a $20 million position, whatever it is. Fantastic. But you could have put the other
right
328,000 in, and that goes 400x, and then you got another 100 million behind it in returns. Model that you're going for here.
We had Ho Nam from Altos Ventures on for a special episode acquired, 2 months ago, David? And Ho has this perspective where Altos is unique in this way. His comment is seed investing is the greatest discovery mechanism of all time.
100%.
And they really, it's not a secret, but really their strategy is actually they're a growth investor, but they only growth invest in their own fund. And their seed, their fund, their early stage first check exists as a discovery mechanism to be able to better evaluate and better underwrite companies than the market could. So they know when to pile the huge dollars in an information advantaged way.
100%. You cannot trade on insider information in public markets. And that's all we trade on in private markets, correct?
Yep.
Like literally everything is insider trading in a private market.
And the funny thing about the Altos story and Ho and his partners is you would think it's so smart and it's what we do. And you would think the institutional LP community would love it. It took them decades to get the institutional LP community comfortable with what they're doing. To your point, Jason, about
even if something makes sense and it's logical, if it's different than the way things are classically done, it's very difficult to get people on board because it's new. It's unproven. It might be better, but I do know the other thing works. Maybe not perfectly, but it works. So I'm going to keep doing the other thing.
All around the world, tech companies are innovating and driving returns for investors. Our crowd analyzes tech companies across the global private market, selects the ones with the greatest growth potential, and they bring them to you. From personalized medicine to cybersecurity to robotics to quantum computing and more. In state-of-the-art labs, startup garages, or anywhere in between, our crowd is identifying innovators so you can invest when growth potential is greatest. Early, just like me. Our crowd's accredited investors have already invested over $1 billion in growing tech companies, and many of their members have benefited from their 46 IPOs or exits. Now you can truly diversify your portfolio by investing early in innovative private companies at Our Crowd. Join the fastest growing venture capital investment community at ourcrowd.com/twist. That's ourcrowd.com/TWIST to sign up for free.